Con artists, Bernie Madoff. The story of Bernie Madoff is one of the most infamous financial crimes in modern history, not because it was hidden in a back alley, but because it operated for decades in the center of global finance. Madoff built his reputation in New York City as a successful investor and broker. He founded Bernard L. Madoff Investment Securities and even served as chairman of the Nasdaq Stock Exchange. To many, he looked like a pillar of Wall Street, someone with credibility, influence, and access. That reputation became the foundation of his success. What investors believed they were getting was steady, consistent returns from a sophisticated investment strategy. In reality, Madoff was running a massive Ponzi scheme. Instead of generating real profits, he used money from new investors to pay returns to earlier investors. As long as new money kept flowing in, the illusion held. Over the years, he attracted an extraordinary range of investors: wealthy individuals, hedge funds, charities, universities, and pension funds. The appeal was not just performance, but exclusivity. Many people were told they were lucky just to be allowed in. There were warning signs. Some analysts questioned how his returns could remain so stable through market ups and downs. His strategy, sometimes described as a split strike conversion approach, was difficult to verify independently. But because of his reputation and connections, concerns were often ignored or not fully investigated. The collapse came in December of 2008 during the global financial crisis. As markets fell and investors tried to withdraw funds, Madoff could not meet their redemption requests. Facing increasing pressure, he confessed to his sons that the investment business was a giant Ponzi scheme. They reported him to authorities, and he was arrested shortly afterward. Investigators later estimated that his scheme involved about $65 billion in fake account statements, making it the largest Ponzi scheme ever recorded. The actual investor losses were estimated in the tens of billions of dollars. In 2009, Madoff pleaded guilty to multiple federal charges, including securities fraud, money laundering, and perjury. He was sentenced to 150 years in prison and sent to the Federal Correctional Complex, Butner. He died in prison in 2021. The Madoff scandal reshaped the financial world's understanding of fraud risk. It exposed how even sophisticated investors and institutions can be misled when trust replaces verification. It also led to changes in regulatory oversight, especially around hedge funds and private investment firms. In the end, the most striking part of the story is not just the scale of the fraud, but how long it survived in plain sight, inside one of the most closely watched financial systems in the world.